Well, people, it's this chart right here that has me really wondering what the end game is going to be looking like. Well, not only this chart, but this chart as well. And we talk about them both on the Stock Market Brief show. Today, we're going to be talking about some interesting things taking place in the Magnificent Seven stocks and a potential path if we do uninvert and see something similar that took place in history. All that and more on today's Stock Market Brief episode, where we navigate the financial markets through the lens of technical and market analysis. If you haven't done so already, hit that thumbs up. It's greatly appreciated. Let's get into it. All right, people, welcome back. So if you are new here and you haven't seen this chart, this is one that I've shown many times. It's a big picture chart of the S&P 500 on the monthly time frame. Right here is the 10-year, 2-year yield curve. When it's red, it inverts. So we're really red here, dating back all the way to the early 90s. Okay, right over here it inverted, right over here it inverted, right over here it inverted. Down over here is the federal funds rate. And what you'll notice here is we get into these inversions when we start hyping up on that rate hike cycle, when money gets more expensive, and it encourages savings, right? You save money at a higher interest, which we're currently right around this 525 marker, and you can put your money into a high yield savings and make about 5% risk-free. However, it changes when we start sudden to pause, and then we go into a rate cutting cycle where we go into the uninverted state. And we've pointed out just even on the prior video that when this took place, something broke and we saw the market really take a hit. Same thing happened here in 2019, went up a little bit higher, and then we saw the pandemic hit. So that could be a one-off occurrence there. But still, nonetheless, we had the yield curve inverted, giving us some warning signs. Now we're deeper inverted. We're in a rate hiking cycle, which now the market is currently saying we're about to start cutting. Well, when I look at this historic chart, well, when we started rate cutting during an inversion, rate cutting during the inversions, rate cutting, well, it didn't lead to good things. And what would have to get hit in order for the S&P 500 to really get taken down? And that's the Magnificent Seven. The Magnificent Seven stocks, they're up 5.4 times as much as the equal weight NASDAQ since January 2020. So there's been a strong outperformance. Even today, you can see that the market was relatively flat, unless if you're looking at small caps and mid caps, relatively flat. And we had just two, and really just one sector that was up on the day, and that was technology. If you look at the heat map, just take a look at all the red on the screen, and the ones that are green are the big mega cap names, right? Microsoft, Apple, Nvidia, Amazon, Tesla, Google. Meta was flat. Everything else was in the red. So I'm taking a deep look into these names individually to really kind of go over market structure and show you, some interesting things that I'm seeing. It's not a prediction here. I know a lot of people are going to think that, I'm predicting the end of the world, but we're going to get even very tactical on what you can do to prepare even on the smaller time frames. Now, if you haven't seen this chart, this is from Brian Shannon, Alpha Trends, Understanding Market Structure. And we talk about this. He didn't he created this graphic and everything, but he didn't create the, stage 1, 2, 3, 4. I think that comes from Stan Weinstein and, Wyckoff, which we'll go over. But stage 1 is the accumulation. Stage 2 is the market, markup. Stage 3 is distribution. And then we go into a decline. You cannot show me any stock that doesn't move through these 4 stages, as well as index products. Now, if you take a look at this one, I want you to pay attention that even within the market structure, there's shorter term and intermediate term trends amongst the primary trend. So the primary trend, which might be 9 months to 2 years, might be up, but you can have a short-term downtrend and a short-term intermediate trend, and they cycle in and out. So we're going to really dive into that. We're going to go into the longer-term daily charts, and then we're going to go into a smaller time frame, a very shorter time frame, just to give you a good glimpse at turning points in the market. Wyckoff price cycle goes through the same thing, right? You have these accumulation areas, you have the markups, you see these overbought distribution areas, and then you get the markdown levels. But more specifically, he lays out a schematic which you can really kind of see and watch for, and that is what I'm finding very interesting here. The distribution, Wyckoff events phases, right? So you have a bunch of different phases and a bunch of different letters, but I want to kind of name a few off to pay attention to. So you have the BC. The BC is the buying climax. You have the up thrust, and you have the UTAD, which is the up thrust after the distribution. Right when you run into these buying climax, you get this automatic reaction. That's that AR to the downtime. You get a secondary test right over here, and then you see signs of weakness. So what I want to point out here is just some interesting stuff taking place. So this is MAGS, M-A-G-S, and this is actually an ETF that tracks the Magnificent Seven. And what you'll see here, which could potentially be, it doesn't necessarily have to be, this is where we're at right now, okay? We have this big, huge run-up, right? Could be a potential buying climax, could be the secondary test, right? And then we had this sign of weakness. And what just recently took place? Well, as the 10-year yield really fell off, we had this massive up thrust. So could it continue head higher? Absolutely it can. But this is just showing you the possibility of a path. So if this starts falling down and then we potentially get an up thrust after distribution, this could very well be in the early stages of Wyckoff distribution. But this is where it gets really interesting. So I thought first and foremost, I thought that was interesting, but Nvidia. So take a look here at Nvidia. This is on the daily time frame, and I find this to be very interesting because one, first and foremost, the price action's not necessarily bearish because we're sitting next to all-time highs, all right? But when you take a look at Wyckoff distribution and you kind of overlay it with what's taking place in Nvidia, you can see the buying climax, the up thrust, and the up thrust after distribution. You have the buying climax, you have a little bit higher of an up thrust, and then you have a little bit higher up thrust after distribution. Where you get an automatic reaction, you have the sign of weakness down here. It's lining up very well, but what would potentially be, say that this is, not going to happen? Well, we'd have to clear back above that 500. Maybe it even overcuts it and looks like something like that. But this very well could be a sign of distribution. So the potential path down where you get this LPSY, which is the last point of supply, that would look something like this, where we potentially get a little bit higher, and then we start to get a little bit more weaker, and we eventually break down from this sign of weakness over here. So it could be a very long path, but we'll jump into the 30-minute time frames on these soon and really kind of dive into the shorter term trend, right, within the primary trend. So the primary trend, we may be here. Who knows, right? But we might be right here in the shorter term time frame right there, or we might be coming right back down. We could be here for all we know. We don't know, but I will get very tactical momentarily. Take a look at Apple. So Apple looks pretty darn bullish in my opinion. We're sitting at around all-time highs. We broke through this downtrend. We screamed up higher. We flagged and we broke out today. One of the stronger performers, really helping out the S&P 500. But let me just overlay this onto you. This could also potentially be a possible path where Apple, right, we ripped to these all-time highs. That could potentially have been the buying climax where we get that automatic reaction to the downside, which was pretty severe. We had the secondary test, which was actually part of that downtrend. It continued into that sign of weakness, and then we had that up thrust right here, okay? So what would that potentially look like? Well, that could potentially look like, we get the more of the up thrust, maybe it overcuts this all-time high. Everyone's super happy, right? But then what happens if we start coming back down, testing this? Now, look, don't pay attention to the dates, right? I'm not saying that this is going to play out till April of next year. I don't know, but I just drew it out to show you what a possible path may look like if we're moving through, a very similar period of distribution. So that means that we would still have obviously lots of opportunities to still go long, to potentially go short if you short Apple, and potentially more upside right here as we're breaking out of this flag. Maybe perhaps the up thrust is severely higher, right? That could always be a possibility too. But once again, we will get tactical, and I'll show you what you can watch out for those short-term trend changes. Take a look at Microsoft. So Microsoft also, this is an all-time high up here, but this could have been a buying climax. And look at that candle, a huge blow-off candle right here. Boom, we had that automatic reaction. We try to go up for a secondary test. You might be able to look at this like this, where we retested, boom, boom, back tested, and we went higher. And then we continued to go down to see that sign of weakness and got that massive up thrust. The up thrust now is being pulled back a little bit. So is this the end of the up thrust? Well, perhaps. That means this high would have to stay a high at that point. But we're seeing a potential move higher, especially after today's strong candle. So we'll see if this wants to come up even further. Then guess what? We'd still have to watch it. But the potential path, if we start seeing some extreme weakness, and then we get potentially another up thrust, that could be what it eventually looks like. And this is all a possibility because remember, I've shown many times where when this gets deeper into inversion, it actually helps out the market. When you start going deeper into inversion, you see the market rise. It's when we get uninverted. And when I'm looking out to the Fed funds futures, it's saying we're going to start cutting rates soon. And when we started cutting rates, that's typically around the time we start to get uninverted. Okay. If we continue on, we'll go to the next one, Apple. I wanted to go over the Microsoft, right? Nvidia and Apple. Those are like the kind of the main big ones. But now I want to really hop into the 30-minute time frame. So 30-minute, each candle here represents 30 minutes. The purple line is the 5-day moving average. And as you can see here, that's pointing up, and then we kind of flattening out to going up, and price is above it. So if you're thinking of in terms of short-term trends where you can kind of go like this in the overall primary trend, this is what you have to do in order to get very tactical. So as it stands right now, we're above this and the line is inclining. So Apple is in a short-term positive trend. You have a little flag here. I anchored a VWAP to this low over here and its price is still above it. So this right here could flag out and we could potentially go obviously higher. If we start breaking down from this, anchored VWAP from the low of December, start to look for a reconnect of the 5-day moving average. It's when you start getting below it and it starts curling over where you'd say, okay, pause the brakes here a little bit, wait for the trend to turn back around to the positive side to be long. But if it starts turning down and declining, we could be entering in that stage 4 decline in the shorter term trend. Okay, let's continue on and look at Microsoft. So Microsoft is a little bit different. We had this uptrend. It goes through this period of distribution where it starts to flatten out. And now we're kind of going through decline where you see the 5-day moving average. It held as resistance here, and we're trying to come up and test it, but it's declining currently. So I anchored a volume weighted average price up at the high and the low right over here. And what you'll see here is price is right in confluence with the declining 5-day moving average and this anchored VWAP. And then we're holding the low of December anchored VWAP right here. So if we start pinching and we break above the 5-day moving average and we can hold above it, that would be the path to bullishness to go retest this prior high. However, if price wants to reject, right, and then eventually break down from this anchored VWAP and this 5-day moving average, price could do something like that where you can see the 5-day moving average continue to decline. Okay, so right now, be cautious and wait for it to flatten out and wait for it to turn back up in Microsoft. And then Nvidia as well. So you can see here, when we broke that, look at, so we got above it, boom, 5-day moving average, it was tagged, we went above it, held a support, but when we cracked below it, take a look here, it back tested as resistance, came back up, it was declining, held as resistance, boom, further down, boom, further down, and now we're coming back up to test it again. So as you can see, if it's declining, be cautious. So what did I do? Well, I applied an anchored VWAP at the December low over here. I did it to this prior, I think that's the all-time high, and you could see prices below this, but above that. So, and we're below a declining 5-day moving average. So even if we get some, boom, squeeze up higher, pay attention to this upper VWAP, wait for the 5-day moving average to flatten out to neutralize, don't chase, see how price consolidates, and if we can get a move like such. Or this continues to come down, we maybe chop around some more and the 5-day moving average continues to decline and we break from this lower anchor VWAP, then the down decline phase is still intact. Let's take a look at the 15-minute time frame. Those are 30-minute time frames. Now I'm going to show you the 15-minute time frame for the SPX going into tomorrow. As you can see, we just tagged around this 5-day moving average all day. Price is still above it, and price is still in positive gamma territory. So, check for the bulls and check for the bulls. That is good news. But if we start getting below it, okay, be bearish, but with caution. Because why? Because it's still kind of inclining to flattening out. So it's just cautionary. And if we get below the gamma flip level and the 5-day moving average starts to decline, that's where we want to be a lot more cautious. So that's how you get short-term tactical. Now, if we're starting to look at the upside for the daily expected move going into tomorrow, it's 45.87. That's right around that gap fill. There's a large call wall up here at 4,600, so this could be a potential area of resistance to watch. We have not tagged a weekly expected move yet, so if we get good news, right, the market's kind of on hold right now. It feels like it for the jobs report at the end of the week, but if the market likes what it sees, who knows? We can come tag here at 46.51 and don't be shocked. However, right, we have this little trend right here. We have this kind of tight coiling up, right, expansion. It's contracting. And we came close to the lower weekly expected move. So this is going to be a key area to watch if we start breaking down from these levels. And you really want to see it hold in positive gamma territory. Just be careful down here because price, the 5-day moving average, if price stays down here, it's going to start to decline and turn around. And it could be the early start to a potential short-term down trend. Now, also, we talked about price coiling up. So take a look here. This I find very interesting. You anchor a VWAP on the SPY to the December high. You anchor a VWAP to the December low. So month to date high, month to date low. This is the month to date, and this is the week to date. And look at where price is, right? Price has been holding as resistance on the high and support kind of here at the low. And just look how tight it's getting. So very soon, this is going to explode. It's going to either explode to the upside where we come test this, where we go boom, 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 and then we rip up higher to fill that gap, or we're going to break down from this, boom, 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 right? And we might see that expansion to the downside. So it's coiling up. It looks like a big move is right around the corner. So be cautious of that. That's all I got for you on today's episode, everybody. Hope it helps out and gave you some insight into some of the things that I'm seeing in the markets. See you later.